Okay, folks, how are we today? Where is the stock market headed? Where is Bitcoin headed? So let's go. Once again, as you all know, this is Pablo He-Man coming to you from Treasure Island. And basically, it's more of just a recap this time. The last a few videos, we've been on track so far. Basically, back in June when we said Bitcoin was at 17K and what's the name? The Spider or the SP 500 ETF. SP 500 Spider was at 362 area. I said this is probably going to be a big bounce because we're at peak inflation, and then it was bouncing quite a lot. And then by early or late August, I said the market is pulling back, and we saw the SP 500 pull back. I At the time I thought the market was going to keep on bouncing. Why? Because inflation was fast falling, so I thought we're going to have a big bounce. But however, since then, the latest CPI data turned out it is peak inflation, but it is falling slowly. So I've always said to make sure we know the difference between a fast falling inflation or a slow falling inflation. My last couple of videos have been about that. So since that number came out, I've said, look, I think we're going down. SP 500 should at least get to a double bottom, which means 362 on the Spider, and that's pretty much exactly where we are right now. And also, Bitcoin also double bottom about 17, 18K, which is where we got to, low 18K. And then I said I was expecting it to go lower. So for the SP 500 to get around the 330, 320 sort of area, to hit somewhere like the pre-pandemic lows, or pre-pandemic highs on the Spider chart, or the SP 500 chart, or lower. Now, so far, basically what's happening is that that hasn't happened yet. And right now, I haven't done an update to you guys for quite, about like 7 or 10 days. And that's because right now, I think it is a bit of a confusing time because by all reasons, the Spider should have broken down to where the pre-pandemic lows were. Bitcoin probably should have followed, but the Spider SP 500 has not followed, on the way down, has not went down, and therefore Bitcoin hasn't followed either. What's interesting on the Bitcoin chart is that Bitcoin, if we look at it, it's basically gone kind of, into bouncing around this range and forming this sort of a small triangle pattern. This pattern we did see before in around May to July last year when it was at 30K, and a lot of people, including myself, thought it was going to 20K, and then it made a big bounce. Now, so from a technical point of view, that option is always available. It's always possible. And a big bounce is possible. But I guess, I don't think that scenario, I can't rule it out. I can't say 100% it's going to break down here. But although so many things tell me that it's not looking good, so I'm leaning for a breakdown. However, can it do a repeat of what it did, say, this part? Can it repeat what it did back in around June, July last year, and then bounce up? It's possible. It can break out of this downward triangle pattern. So we get a downward triangle pattern, right, like last time, and we get a bounce up. That's quite possible. Although I would say it's not going to make a crazy run like last time. It went from like 28K to 69K. This time, I don't think it's going to run from here to say 55, 60K. If we get a bounce, something like 24, 25K is possible. It's probably the limit of this bounce, and then probably head down. Now, that's because if we look at the more medium term of where the market is headed, it's quite obvious. In the short term, so far in the last 3 or 4 videos, we have been quite accurate. As I said, we've been saying this is, if you've been watching me, we've been saying in these longer videos that I make for my Discord. Oh, by the way, by the time the public sees this video, it'll probably be 2 days old. I usually leave it in my Discord for the first couple of days. But however, the last few videos, we've seen that, SP 500 tanked, as I have been saying, because stagflation is here. The Fed's going to need to hike interest rates. And then we're playing the narrative of saying it's peak inflation, so the market bounced. But I said it needs to be a fast falling inflation, so the market pulled back. And then when a slow fall in inflation data came out, then the market, I said, this is going back to 362 again, and SP 500 went exactly back to 362. So now where are we? I am looking for a breakdown, but I'm not saying this is going to happen tomorrow or this week, because the CPI data will come out, the PPI data will come out, and those are very key inflation data. And by the time the public sees this video, which is 2 days from now, the number is probably already out. You guys already know much more than I do. The market is expecting 8.1%. And then if it goes, I think for the market to have a really big bounce, we really need to see a 7 in front of that number. Say like a 7.9, 7.8, something along those lines. Because where else it went from 8.3 last month to say 8.1 this month. And that's still slow falling inflation. That's still very slow falling inflation. And it's not, even though it's falling, it's not enough to get the market to make a big bounce. So what I've been telling folks in my Discord is that it was a pretty big shock to me to see OPEC come out and do what it did. Essentially, OPEC basically just said, all right, what we're going to do is basically shock the world, shock the markets, and come out with a 2 million barrel production cut. And that's pretty big news, because before, OPEC, led by Saudi Arabia, and Russia is also part of that organization, has always been an ally to the United States. That's why the US dollar is the kind of the only payment you can get for oil, right? That's why they call it the petrodollar, right? That system has sustained our financial system for the last 50 years or so. It's the bedrock upon which financial system that this world runs on is built upon. And right now we all know inflation's bad in US and all these European and Western countries. UK 10%, Germany 10%, EU like 8%, 12% across the board. US like 9%, 8% inflation, and it's not falling fast enough. That's my point. But what does the OPEC do? They're the guys who are in charge of 90% of oil exports in the world. Sorry, of known oil reserves in the world. And they say, we're gonna, cut production, which means less oil supply come into the market. Okay, so then we saw the oil chart bounce straight from 75 back up to around 90. I believe OPEC is defending that 90 area now. Now, it's basically pretty crazy situation, because if you've been watching my videos, if you're in my Discord, I said we should get a big bounce at 75. But honestly, I did not expect them to cut production by this much, by 2 million barrels. I mean, they're only producing 30 million barrels a day. You cut 2 million barrels, that's something like 6.67% of daily production. So, since that is happening, in the next few months, not this month, the CPI, not the one that's going to come out in 2 days' time, which is Thursday, but maybe the next month or the month after that, we'll start seeing CPI getting stuck, inflation getting stuck at a relatively high level, somewhere like high 7s or low 7s. The reason being because right now, the inflation data that's coming out in 2 days' time or tomorrow, that reflects the September CPI inflation, because we're in October right now. Next month's data, say 11th of November, would reflect October's number, and as we know, the CPI number is basically made up of roughly two components. One is what they call the sticky part. One is called the non-sticky part. I mean, it's pretty simple to understand. If something's sticky, it basically goes up and it stays there and doesn't come down. If something's non-sticky, it goes up and it can go down, go up, go down. It doesn't stick. So, for example, The sticky part, the non-sticky part is something like oil or wheat prices, which are heavily influential of fuel, energy, and food costs. So oil prices, as we've seen, can go to 140 and then back down to, say, 75 and now back to 90. And OPEC's trying to stick it at around 90. So that's really going to be pretty bad. That means the sticky part is moving back up again, and they're trying to keep it there, right? The reason why it has gone down is because Joe Biden has an election coming in November, and he's doing what any other president has done. Nothing good or bad about what he's doing. It's basically what every politician does, which is selling the United States SPR reserves, special petroleum reserves. It's like a national emergency reserve you have just in case there's a war or something. When you sell that, when you empty it, and it's like more than 50% empty now, you need to basically build it back up again. To build it back up again, how do you do that? You got to buy it back, right? Buy it back from the market. Once the election's done after November, maybe even starting in November, December, they're going to need to buy it back. To buy it back, guess what? That means they're pushing the prices back up, right? And OPEC is cutting production. So where do you think oil prices will be in November, December going forward? And now let's look at the sticky part. That means the inflation goes up and doesn't come down. The sticky part of inflation is things for services. I explained a lot about this in my last video, and it's basically like services inflation, as we saw in my last video. We're looking at the data, has basically gone up more and more and more. Now, that's really not good news, because services relies on what? Like, say, hairdressers or waiters or masseuse, anything, or call centers, anything that requires a lot of humans. So what's the main cost component there? It's wages, right? Once wages go up, you can't tell your worker, oh, look, I just gave you like a 10% wage hike to $20 an hour, and now, oh, dude, the economy isn't great, I'm going to take that back to $18.50 an hour. That just doesn't work. Like, I mean, it does happen. It's extremely rare in real life. So basically, once wages go up, they stay up, and wages has been going up. This is all explained in my last video. If you want, check it out. So now you've got the sticky part of inflation staying up, and the only thing that was taking inflation down was the non-sticky part, or the energy prices, petrol prices going down. And now they've just cut oil supply production by 2 million barrels a day, and which means oil prices are getting quite going to stay up around 90 or 85 area. That's where they're trying to keep it. So I don't know about this CPI that's coming out in 2 days' time. As I said, if it starts with a 7, like a 7.9, 7.8, then we'll have a big temporary bounce. Bitcoin can go to 20, 22, 25K. Probably that'll be the top. But if it bounces up, if that does happen, I would short sell it. I would short sell Bitcoin. I would short SP 500 because we can see in the intermediate term, we can see that inflation's not coming down fast enough. In fact, it might go sideways and might even go up a little bit. So I imagine by November, latest December, we're going to see CPI inflation somewhere in the mid to high 7s and stay there. So for example, 7.5, 7.6, and just stays there unless something pretty dramatic happens, unless this war ends straight away in Russia or whatever. So right now, in the short term, so far we've been quite right in terms of calling where the SP 500 is going, and but right now I'm saying, depending on what the CPI number is, it could bounce, it could go down. But however, for the medium term, unless things change dramatically, if it does, I'll be the first one to update you guys. Unless things change dramatically, it seems that basically things are really not looking good, because it looks like OPEC is on a collision course with the Federal Reserve. The Federal Reserve is hiking interest rates. That means they're trying to kill inflation. They're hiking. And people and businesses are cutting costs, cutting workforce, cutting jobs, because Fed is hiking interest rates, and there's money is becoming expensive. The cost of money is becoming expensive. So basically, inflation's coming down. However, we didn't expect, OPEC to come along and basically to be doing the opposite. Fed is hiking. OPEC is cutting. OPEC is saying, well, oil prices getting too low for me, right? I want to sell oil prices for higher. So can you imagine that? That's pushing inflation back up or supporting inflation, supporting, petrol prices. It's a clash of, I said in my Discord, it's like, imagine if there was a clash between Justice League, Superman, Batman, and then you've got, the Avengers, with Iron Man and Thor, a clash between two gigantic groups. Like I don't think this is the only time the OPEC is going to cut interest rates, cut oil production like this. I think for them to do this, it's symbolic. It's for them to stick up their middle finger, right? They're sticking up their middle finger at the Biden administration, because Biden administration wants to go green, which is really not good for oil or petrol, and they're saying, if you want to kill us, we'll fight back. They'll probably like Trump more because Trump is pro coal and that old energy. I'm not saying which president is better. I'm just saying that's what's happening in the world right now. So basically, over the next few months, however, something like November, December, January, February, I think inflation is going to get stuck at mid sevens, low sevens, somewhere around that area. And unless something dramatic happens, like unless the war ends in Ukraine. So why haven't, it's a bit perplexing to me. The stock market hasn't reacted all that much to this yet. So the S&P 500 SPY has gone to 362, as I keep on calling it, the number 362, and making kind of a double bottom. I was expecting the SPY to hit at least 362 and then go lower. So far, it's been very stubborn. It's basically still bobbing around that area, and we can get a big bounce if CPI comes out to be relatively low. Like I imagine starting with a 7, then it could happen. If it doesn't, say it comes in like with 8.1 or slightly higher, like 8.2 or even 8.3, then we'll probably see a nuke. We'll probably see the S&P 500 nuke. Even though S&P 500 hasn't gone down as much as I thought it would, but you know what has gone down a lot? The bond market. So the bond market is what we see here this purple line is something called MOVE. MOVE is essentially the bond market volatility index, right? It measures the volatility in, the red and green. That's the bond market, the bond yields, right? And as we can see, it basically has been hitting a very high level. Let me just close that for 1 second. Okay. And as we can see, it's hitting a very high level, which is almost as high, it's almost as high or just as high as, say, March 2020, which is when the COVID pandemic hit and S&P 500 just crashed like 48%, right? There was a major crash. Bond market is saying this is as bad as sort of the COVID pandemic now, the amount of damage it could do to the market. It's not as high as 2008, 2009, which is when the housing market crash caused the GFC. But you can see it's kind of, if it breaks out from here, it can get around to the 2008, 2009 level, right? It's saying how dangerous this market is right now. And see here, in March 2020, it was one single spike, right? And it just came back down. Whereas here, it's going up, down, up, down, up, down. It's consolidating, it's building a base, and then it's going to pump higher. So this is a kind of a pretty crazy situation. So the bond market, which is the largest market in the world, is certainly saying, hey, there's a lot of danger here. A lot of danger. Beware, guys. Beware. On the other hand, the purple line is actually the VIX, or the volatility index of the S&P 500, derived from its options. They're the equivalent of each other. The MOVE is for the bond market, but the VIX, the purple line, is for the stock market. And we can see the VIX has basically had a massive spike in 2008, 2009, and it got to around whereabouts? It got around to, let's see, where is it? Yeah, got around to 80, got around to 80. And then in the COVID pandemic, panic, it got around to 65, right? Whereas right now, you can see where it is. It's basically at 33. It's not even, it's no higher than last time in June. This is May. It's even smaller than, say, Feb 21. It's smaller than, say, November 2020. It's smaller than, say, June 2020. It's basically, it's, smaller than say, September 11. This is September 2011. It's smaller than May 2010. The point is basically the stock market is not reacting the same way as the bond market. It's not sensing the danger yet. It's still sort of just hanging around here, right? And it could even bounce up if we get a low CPI number. But as I said, I'm expecting a short bounce. So the question is, who is right? Who is right? Is the bond market right, or is Bitcoin? Is the bond market right, or is the stock market right? Usually, in times of crisis like this, I would say the bond market is right. They've proven themselves to be right, to be half a step to a full step, 3 weeks, 4 weeks, 6 weeks ahead of the stock market almost every time when there was a crisis that happened. If you look at for example, the COVID crash of March 2020, bond market started crashing in late February, right? Stocks didn't crash until mid-March. Even Bitcoin was earlier in the stock market by like a few days, by like 7 days or something. So bond market goes first, Bitcoin and crypto goes next, and then stock market is probably the latest to react. But right now, what's happening with Bitcoin is that Bitcoin is basically just purely following the stock market, almost matching it move by move, bounce for bounce, drop for drop. So basically, if we get a major pullback or crash in the S&P 500, then we see a similar move in Bitcoin. So for the medium term, I think that's where it's headed, because I can't see how this situation of the Fed and OPEC versus each other is going to resolve. I think this is a really big deal. Most commentators in the market haven't even realized how big of a deal this is yet. So in the medium term, I think the next 2 to 6 months, I think the stock market is going to be lower. S&P 500 goes to somewhere around from 362 where it is right now to about the 330s to 320s. However, CPI number comes out in 2 days. By the time the public sees this video, you already know the number before I do. If it's a number with a 7, that's starting with a 7, probably we'll get a big sharp bounce, but that bounce probably only lasts 2 to 4 weeks, 6 weeks, 2 to 4 weeks, and then we're probably back down again. So stay safe in the markets, guys. Some big trading opportunities, buying opportunities are coming. I wish you guys all the best. Thank you for your time.